fam? It's your girl Alexandria B, and today I am going to show you all the most important piece of technical analysis that you have to know. It does not matter if you know how to read candlesticks. It does not matter if you know how to put a trend line on a chart, if you understand how to use indicators. If you do not know how to pull up a chart, mark it off, analyze it, and then enter from there. So today, that's what we're gonna learn. I'm going to show y'all the easiest way to chart, analyze, and enter on your own. Because that's what we're here for, right? So that you can fish for yourself. Amen. Now, before we get started, I want to go ahead and break down the definitions of the law of demand and the law of supply to you. You have your technical definitions here. Make sure that you pause, screenshot, write it down. I'm going to explain it the Alexandria way. The law of demand simply tells us that the more affordable the price is, the more buyers that we're going to see. We love things that are on sale. Give us something that's 20% off. I'm there. I'm buying it. The law of supply tells us that the more expensive the price is, the more sellers and the less buyers that you're going to see. If something is on sale or if something is available at its normal price, aren't you going to say, well, you're going to wait for the Sunday sale paper and see if maybe you can catch it 10 to 20, 30% off, right? You're going to see less buyers when price is at a high. Now, it really depends on who you're talking to when it comes to supply and demand and support and resistance with technical analysis. I have found that most people say that supply and demand and support and resistance are the same thing. Y'all talking to me, it's not the same thing. So we're actually going to head over to the chart, and we're going to start off with looking at Eli Lilly, and then we'll go to Keurig Dr. Pepper. We're going to chart these two very different stocks the same way, and we'll see how we get the exact same result. Y'all ready? I'm excited. All right, so let's head over here. We're back at the chart, and we're going to check out Eli Lilly. Now, the first thing that we're going to do is find our supply and our demand zone. So I call it charting the 6, and then we analyze the 4. So when we are charting the 6, you're going to have your supply and demand, 2 retracement levels in between, and then your trend lines. Stick with me. I'm going to show you. I'm going to show y'all a couple of different methods here. Now, the first thing that we want to do is we want to go ahead and mark off the major highs and lows that we see. The higher up a time frame that you are with less information, the easier that this is going to be, especially for a stock that has gone straight up for the last 6 years, right? So I came to the monthly, and what I'm going to look for is pivot points, major highs and major lows that I see here. If you have a little bit of problem with that, or if you're new to this and you're learning, there's an indicator that I suggest that you use, and it is this one, the pivot points high low. Pivot points high low. If I turn this indicator on here, you see that it's showing me the pivots from here, but again, this went straight up since that point, and we know we have more highs and lows from there. So let's go down a time frame. Here we go, right? We went to the weekly, and here we go. So you can go ahead. What we want to do is mark off some highs and lows that we see. Now, you need to mark off the most relevant highs and lows, but we'll talk about that here in a sec. Let's just go ahead and mark these off first. Right where we see these pivots. It's telling us that this was another major pivot level, which was clearly a high. And then showing us another pivot level here, which again was clearly a high. All right, so we have that, and we'll go ahead and turn these off, and let's dissect this. This high and this low is from December 2022, and the low came March 2023. This was around 309, and price is now at 850. Do I really care about marking this off on my chart right now? I don't. We don't. We really don't, okay? It is not projected to come back down towards 300. We are not expecting to see that at all. Do I care about this high that came in October 2023? That then turned into support in January 2024? Absolutely. We just found the range that we should care the most about. So we're going to take this level that we put from the high of December 2022, And where we see that the high came in here, we see support. We see lows around this area here. So we're actually just gonna take this level and move it on up here. And I'm gonna put it at the wick where that low came from. Here about 516 and then pushed back up to 624. Held it as support from at the 624, 630 to give us this next move up to 800, all right? And we can go ahead and delete this. So that is a way right there. If you're new to this and you're really trying to learn how to mark these things off, use your resources that are provided for you on this platform. Use them. There's nothing wrong with that. It's there to help you, right? Boom. We have what I will call our supply and demand range marked right here. Now, since we understand that our demand is where we're going to see the most buyers and they push price up, I label mine green. And since we understand that resistance is where, or these highs, our supply zone here is where we're going to see most of our sellers, I'm going to go ahead and change that red. We typically, this is where the sellers come in and they push that price down. Now, we also see that this is where price pivoted in here. So we're going to go ahead and keep this. And this is one of the retracement levels inside of this range. So my retracement levels, I do this orangish dotted line color, okay? I enjoy color coding and marking off my chart. Now, if we caught this level here because it was previous resistance that turned into support, where was the support from this? Or where is the lows from these highs that we got here at the 800? If you have problems with that, simply use your cursor. If this was the high, where's the next low we see? Down here, right here. If I look across, look at all the support that came in there as well, right? It didn't just get there and touch that 1 week. It did that multiple weeks. It pulled back, it touched that in there, and boom, y'all. We have 4 lines. We have our supply zone, we have our demand zone. We have 2 retracement levels in there because price never just goes straight up or straight down. We got 4 out of our 6 lines already right there. Too easy. So what do we need now? Now we need our trend lines. We might as well start the trend at where we started our demand zone. And we're gonna track our lows. From this low, the next low was here, our next low, our next low, all right? And we want our trend line to touch the most amount of lows, or to get the most touches on it. We'll say it like that. So did this cut this off? Yes, but we'll go down to the daily and look at that. But look at how many more times it perfectly and beautifully bounced right there on that level. Chef's kiss, chef's kiss, chef's kiss, all right? Now to mark off our resistance level as well. If this is the low from this demand zone, this was the high that it came from. And so we're gonna track our highs from there. Next high, next high. And of course, let's just drag it out. And boom, you have successfully charted the 6. But let's dive into it a little bit more. All right, so now that we've charted the 6, let us analyze the 4. So the 4-step process in which I analyze, enter, exit, write my trading journal, all of that is in this order specifically every time. I'm not entering into a trade if it's 3 out of 4 confluence. It needs to be 4 for 4. All right. Step 1 is structure, which for me is supply and demand, because that is how the economy is structured, based off of supply and demand. The institutions create these supply and demand zones. If you're SMC, ICT, baby, you would look at it as an order block. Okay? Institutionally created. You know what I mean? The second step is the trend, which is where we pay attention to that candle's high and low. The trend is what institutions allow us retail traders to go in and catch and trade that. We never know when the trend is going to break. They do. Step 3, I then pay attention to price action, which is going to be candlestick and chart patterns as well as volume. A candlestick is not confirmed unless the volume matches with what that candlestick is saying. And then step 4, the last and final step, is pulling up an indicator. I will never allow a computer generated indicator to tell me what to do. That's just me. All right. So let's go ahead and hop into it. And we're going to start off with step 1. All I'm doing right, did I spell structure wrong? No. All I'm doing right here is writing down my observations for each step, and then we'll wrap it up together and see what it gives us, all right? So for step 1, when I'm looking at the structure, I see that price broke above the supply zone, but we do not have a retest here on the weekly. We do not have a retest yet. We already know that when price breaks out of a range, a trend line, whatever it is, that we expect to see price retrace back there. They have to go back for the rest of their orders. They can't release all of their orders at once because price would just skyrocket or dump. It's trillions of dollars that they're able to manage and that they have, right? They will not place and release all of their orders at once. We need a retrace. That's what I see for step 1. For step 2, the next thing that we see is looking at the trend. I see that price bounced off of the support trend line 5 weeks ago. Right now, it's in the air. So for me to see this right here, that it's just in the air, it hasn't reached a resistance trend line, it hasn't started to pull back towards the support trend line, I'm going to mind my business until it does one or the other. This is an empty space right now. I'm using all my hands, but this is an empty space right now, meaning that the move, it's in the middle of the move. What? Why would I get in? That's when you're going to trace it, okay? Do not enter and pretty much do not exit unless price is at one of the 6 levels that you drew. That's a gem. That's a gem. For step 3, when we're looking at price action, I didn't really honestly see much here on the weekly time frame. I did say possibly a 3 gap up pattern is forming because we did get this 1 gap, 2 gap. Possibly we'll see another gap going into this week, and then the following week, the 4th weekly candle would start a reversal based off of this. And when I'm looking at the volume, I see that the bullish volume is a little stagnant. On average, that bullish volume is about down here. And let's just draw a level. Let's just draw it so we can see. The bullish volume on average is about right here. All of the bearish volume from this year, except this week in January, has been higher. It's just an observation I have right there, right? Now, when we look at the indicators, the main one that I look out to start off is going to be the moving average. And that's simply because the moving average is telling me what the average price is for whatever day I have set up. So the averages that I'm looking at is the 20, 50, 100, and the 200 MA. I love those. And I see that right here, the 20 MA is right in line with the trend line. So when I read this back to myself, straight up observations, no bias. Eli Lilly has broken above the supply zone but has not retested yet. It is bouncing off. It did bounce off the support trend line 5 weeks ago, and it's not near the resistance or the support trend line right now. Price action is telling me that possibly a 3 gap up pattern is forming, possibly, meaning I should expect a reversal in the next 1 to 2 weeks. And with the indicators, I do see that my moving average, the shortest moving average that I'm going to use for a swing trade, the 20 MA or 21, whichever one you uses, is right there on that support trend line, which is right in line with the supply zone that it recently broke out of, that it has not retested. You with me so far, fam? So now we're going to take this same analysis that we have here on the weekly, and we're going to travel down to the daily, and then we're just going to copy and paste it over here. We shouldn't have to change too much off of this analysis going from the weekly to the daily, but let's check it out. And I'm going to go ahead and take off the indicators, because let me look at the levels that I drew first. All right, I pinned that there, so we're gonna move that out of the way. Structure has still broken over the supply zone without pulling back and retesting it inside of retesting the zone that we marked off. It still is nowhere near a trend line. When I go down to a lower time frame, possibly the 1 or 4 hour, we'll look for a secondary trend and get there. As far as price action, this is going to be a little bit different for me, being that it's here on the daily time frame. So let's change that here and write our observations here on the daily. What I see is that there is a decrease in range. meaning that these candles are getting smaller. The bodies are getting smaller, letting me know that y'all not really pushing it that like the buyers ain't really there. Y'all not really doing that much versus these candles when it was coming up off the trend line. All right. So I do see that, and the bullish volume is still much lower. The bullish volume is lower than any bear volume. And then now what we're going to do is go ahead and pull our moving averages up, and let's check those out. Move this out the way. So we do have my 20 moving average, which is the yellow, crossing above the 50 moving average, this blue one here. Love that. But again, this 20 moving average is right here where the breakout was. We need to catch the average. I would love to see this pull down towards 802. But it'd be even better if it came down here to the 50 at the bottom of the supply zone where the trend line is also at. Isn't that confluence? If we were to see a bullish signal right there, wouldn't that be confluence? I know, y'all. Chart to 6, analyze the 4 is cold. I know. All right, so here for the indicators, we're going to say 20 and, well, we'll just do the 2050 MA is is inside the supply zone. SZ for supply zone. And we have that. Now, when I read this back, Eli Lilly has broken above the supply zone with no weekly retest yet. It bounced off the support trend line about 5 weeks ago. And according to price action, the range is decreasing with the bullish volume lower than any of the bearish volume. And my 20 and 50 moving average are inside of the supply zone right against the trend line. What is there to doubt? What is there to doubt? We see it. Okay, what is there to doubt? What is there to doubt? Not much. Now, based off of the levels that we drew, what we see here, the next thing that I want to do is I'm actually going to go ahead and look at the analyst ratings for this year. So here on TradingView, you could simply just Google what is the analyst projected target for Eli Lilly. I like to use TradingView because it's just right here. And if you pull this up on your screen and you click these 4 squares right here and then click on forecast, it pulls it up. Currently, Eli Lilly is at $850 with the average price projected to be $875, with the highest price of the year projected to be $1,023. So we got $875 and $1,023. Okay, let's mark off $875 here. And we'll take this and we'll do it like a little bright yellow and mark them off this way. And then we had 1,023. Let's mark that level off as well. Because if we're looking at that number, it's crowd psychology. Hundreds of thousands of other people are also looking at that level. So from looking at this, because we are expecting to see price pull back a little bit, right? Perhaps it'll reach 875, which is a psychological number that we are all looking at according to the analyst rating. Because this is a new high. There's nothing to the left for us to look at. We got to use our resources for it. Perhaps we'll see a pullback. We'll see a rejection here at the 875 to then, because it's only about $15 away from it, to then pull back and catch the averages as it's retesting and hitting the supply zone. Perhaps that's what we'll see, fam. We're not Miss Cleo. We won't guess it. We won't guess. All right. Now what we're going to do though is we're going to go ahead and go down to the 1 hour time frame, because what we need to do is find ourselves a secondary trend line. All right. There is a difference between your primary and your secondary trend. You're going to have your primary, secondary, and your minor trends. The primary trend is what we're going to see on those higher time frames. We'll say the daily, weekly, monthly, yearly chart. That is the overall trend for whatever ticker that you're looking at. Your secondary trend, you're going to find those in between your 1 and your 4 hour time frame. I know some people look at the 2 and the 3 hour as well. You have to do your due diligence on your chart and see which time frame that you like best. But that is the corrective move. That's when prices retracing, because we already know it's gravity. Nothing just goes straight up without pulling back and coming back a little bit. That pullback is the secondary trend. The minor trend, which you'll hear me call it the mini trend sometimes, is what we're going to see on the 30-minute and below. And your minor trend should be changed 3, 4, 5, 6, 7, 8, 9 times a day. Okay, probably not that much, but you know what I'm saying, because that is what price is doing right now on an intraday level, and we break and make new trends all throughout the day. So when we're back over here and we're looking on our 1 hour time frame, that's where I like to go. I'm going to take this trend line and we can see this. This is going a little bit more parallel, right? This helps me a little bit more. And we're just going to start at these lows down here, and we want the most touches. What lows do I want to start at? I mean, I could start down. Let's do this. I like this. I love this actually. Yes, I love this. So I'm getting the most touches very clearly from May 14th, bounced off here again May 20th, again May 28th, and again June 5th. When we're here looking on the hourly, look at these candles. Look at these candles here, my baby. And then let's go ahead and change our secondary trend line to blue. So when we're here, look at this. Failing to break up, right? As it's pulling back to this previous consolidation, like around 845, 846. So about $4 or $5 away from there. We should see it continue to break there and come down to the trend line. We like stocks that continue to return to the trend line. We like that, okay? Now let me do the right thing. Let's do the right thing. And we're going to go ahead and mark off the resistance trend line as well. Getting the most touches. Okay, because if this is the low we start at, we'll start with this high. We got another touch on the 21st, the 23rd, the 3rd, and then this Friday, the 7th, all right? This should be working its way back down here to the trend line. Now, I'm going to chart the 6 and make sure that I have this charted out here as well. This 875 that we marked off from the projected median range, I'm using that as a resistance level. Down here, although we marked it off as our supply zone, here on the hourly, this is my support. We have our trend, right? So we have 4 out of 6 lines. Now we just need a corrective level in between. So this is where I would say, again, if you have a hard time spotting this, you're new to it, pull up the pivots. Pull up the pivots. What do we have here at this 821 when you look across? And I rounded that up to the 821. And then we'll take this on my lower time frame. I'll offset it a different color because the original 6 on my weekly time frame, I shouldn't really have to change that up too much. Until we go into a new supply and demand zone, I shouldn't have to change much of that at all. So we see this previous resistance that turned into support there. And we see this resistance level here. And we mark that off. Turn our pivots back off because we don't need them up. And look at this beautiful range that we have here. Marked off from the 800 to 875. And then of course, there's nothing wrong with adding a 7th level in here because we see these highs here at the 857. We have this totally and completely marked off right here, y'all. And so my analysis for the following week, I'm not interested in playing this to the upside at all. It hasn't retraced. And since my analysis is showing me that a pullback is coming, I'm not going to switch that up if price goes up. It just didn't play. My analysis didn't play out yet. So I'll wait until my analysis and that setup is there. All right. I'm not pivoting. There's a difference between pivoting because the market pivoted and you having a clear set bias at the end of the day and analysis and trading plan, and then pivoting because the market opened up and did something opposite of what you expected. Don't trade it. Wait until the market does what you analyzed. All right. So for me, we're at this resistance level. Baby, come on down here to this trend line and come on down to this 838. Now, if this was to bounce at the 838, we got a bullish signal and worked its way back up to the 857. If you wanted to take you a little day trade, which I would not expect for Eli Lilly. I would not tell you to do that for Eli Lilly. This was something else, right? You want to do a little day trade here from this 838 range back towards the high, and possibly it would double top there. That's fine. If this breaks below my trend line to trade it down towards this 821 range, I'd like that more. And if it continued to lose this, I'd scale out here and continue to trade it down to the 800 range, all right? So we're gonna open up or turn on our indicators, which my 50, which you can just barely see it because it's blue as well, was right there in line with my trend line, with the 20 MA, right here in line with the level that we had marked off with this 838, so we'll say now 841 range. The 100 MA right there, the 200 MA inside my supply zone to get me down here to this trend line. Snap, snap, snaps, purr, purr, purr. I love this setup. What do y'all think about it? So now we're gonna take KDP, which is Keurig Dr. Pepper, and we're gonna do the exact same thing and start off with charting the 6. Now this is very simple. I could put my supply zone here, but y'all know how I feel about that. The start of my supply zone there, but y'all know how I feel about that. Why not just go ahead and mark this off as the supply zone, like the start of it, and then I'm gonna mark this off up here from the 3902 to the high of 41 as the supply zone. So when this rejected, it came down to this low. Not this low, because this was most recent. This rejected and it came down to this low, and then look at that long lower wick that we had and bounced this way back up. Now, one thing that I want to make sure that y'all are paying attention to is that I'm on my monthly time frame right now. I'm on the monthly time frame. I start as high as I can go, baby, and get what I get from there with the least amount of info involved. And so this here, I don't know if I really like that this is hanging down over there, or would I want to just move this here? But also this was 2020 and this low was October 2023. This isn't too relevant to me. Now, if we happen to come down below 2754, I'd adjust my chart. But for now I know I said this whole wick here. I know I said the whole wick. These lines aren't glue, okay? So what I'm doing is I'm gonna mark off this space here down to the level that we put where this low came in. I'm gonna drag that across. Let's turn it green and observe. Again, I'm doing this one in real time with y'all. One of my mentee chat this morning was going off and they made my brain start going, and I saw what I saw. So here, now, what about this space all in here, right? You might be saying, well, why didn't you drag this level all the way up there? I'm thinking this is where I would want to put my retracement level, because look how it caught that support here too in January 2021. So let's do that, and as a retracement level, we're gonna change it. And then if this was the support, and we'll look historically first, if this was the support, where was the high? It was here. So let's put that level there. That's our reference point. It was right here. We got support. Okay, and this first high came from January 2021. Still holding as support until March 2023, 2 years later. Then it lost that level, came down to the previous support from February 2021, back in June 2023, and then stayed in this range. Do I want to move this here actually? And this is my reference point right here. Let's see if we like that better. Make sure you rewind this to really see. Do I want to just go ahead and move it here? Because look at this support. I like this much better. My eyes, it makes sense to me. And look where price is right now. After it broke. Oh my gosh, y'all, this is beautiful. So I'm going to look at this resistance trend line here. Highs. Because we want the most touches on this trend line, right? This is my primary. We're going to turn it white. And I'm going to go down to the weekly so I can show y'all. Now look at this. And if you have to adjust and move your stuff to the weekly to different time frames, do that until you're comfortable to where you can look at the monthly and see the weekly candles. Until you can look at the weekly and see in your head like, oh, this is what those daily candles look like, and so on, right? Adjust. So look here, right? I'm okay with this pop out because it was a failed break. This was not a failed break. This broke structure. This was a market structure shift in here, right? And look what's right in front of us, just off of this, but we haven't got to the 4 yet. Let's finish chart. So we need one more level. We'll get our support trend line. Now, I know that this was the most recent low that we've had, and then coming to this low. But I'm going to, because we haven't pulled back and retested this broken trend line, right? I'm still just going to go ahead and keep with this resistance trend line. So if this was the high it came from, this is the high, this is the low that it came from. And then just track it. Low, 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 low. That has not been revisited because it held this demand zone instead. It held our demand zone instead and went there, okay? So now we have our 6 marked off. Let us analyze the 4. All right, so we already know our 4 steps: structure, trend, price action, indicators. I already wrote them out for you, but let's go through it. Structure is telling me that price moved from the demand zone, and it's about $5 away from our supply zone, around $39. It broke a 2-year resistance trend line because this resistance came from August 2022. Price action is showing me that the range is decreasing at a retracement level, and it broke the trend line with low volume. My indicators are, when I'm looking at these, RSI is above 50, which is absolutely bullish territory. MACD made its first crossover into bullish territory here. And the reason why I'm saying its first crossover is because you'll typically see 2 to 3 crosses before it moves from bullish to bearish territory or in reverse. All right, so y'all already know the 4 steps: structure, trend, price action, indicators. So I already wrote my observations out for y'all, but let's go through them together. So according to structure, what I observe is that price moved off of the demand zone, and it's about $5 away from the supply zone at around $39. It did break out of a 2-year trend because this resistance came in August 2022. We broke out of that 2-year trend with no retracement yet. Price action is showing me that the range has decreased and it's consolidating at our retracement level around 34.62. And it broke the trend line with low volume. My indicators are showing me that RSI is above 50, which is absolutely bullish. Anything above 50 on RSI is bullish, and anything below 50, as you see here, the purple line below 50, we had a bearish move. When it came here above 50 right here is when it broke the trend line and we had a bullish move. All right, we're in bullish territory. It's also showing me that MACD made its first bullish cross into positive territory. The reason why I put first is typically we'll see MACD do 2 or 3 crossovers before it changes from into the positive or negative territory. So my indicators, those are showing me that it's up. And when I look at my averages, which for me is the end all be all, because what we're dealing with all day is price. Shouldn't I know what the average price is? I'm just saying. So here we're above all averages. We love that. But look at this 20 and 50. We have not made a bullish crossover yet. None of these have bullish crossovers, but price is holding them all as support. That seems to be in line with us understanding that price is probably going to do a little pullback back here towards 32. And then continue to give us our move here to 39. Now, something else that absolutely fascinates me with Keurig Dr. Pepper right now, while I'm really looking at it, is the news. So if I pull this up, Keurig Dr. Pepper to rally around 18%. Here are top 10 analyst forecasts for Wednesday. Definitely so. Keurig Dr. Pepper is maintained at overweight. Wells Fargo adjusts price target on Dr. Pepper from 41 to 39, keeps it overweight. Dr. Pepper overtakes Pepsi to become America's second favorite soda and most bought, behind Coca-Cola. I absolutely suggest that you look at the annual revenue for Coca-Cola and Dr. Pepper and the quarterly revenue and compare those. Maybe Dr. Pepper might be at the top sometime soon, right? So they're in the news. They got people watching them, stuff going on. I'm paying attention too. So based off my analysis here from charting the 6, analyzing the 4 here on the weekly, again, I would love to see KDP pull back towards 32, hold this as support, and then continue to work its way up towards 39. Now, will it break 39 and make an all-time high? Let's check out the price target. So we're just going to go here and click on forecast. The average target is to be 36. Of course, we just read the article where one analyst company bought it from 41 down to 39. The average being 36.87 at 37. The high being 39. I'm not mad at this, y'all, because if it gets to 39 and it rejects there, guess what I'm doing? I'm looking to trade it right on back down towards the 31. And if it fails to hold that on into the 28, into the 27, 28 range. I promise y'all, charting and analyzing a ticker is easier than what you think it is, right? If y'all want me to make more videos like this where I walk through my process of charting and analyzing, let me know in the comments. I'm literally here for y'all. This content isn't for me. I got it. I'm making this content for y'all, fam, right? So I hope that you really enjoyed this video and you learned something. I'll see y'all at the